Hello students, myself Ashok Kumar Singh, economics teacher from Saraswati Vidya Mandir, Sinidi. In this video students, we will learn to calculate national income by income methods. So let's start.
National income is considered as the most comprehensive measure of the performance of an economy. Its measurement is an extremely complicated task. Students, national income of the country can be measured by three different methods. First one is income method, value added method, and expenditure method. We have three different methods to measure the national income because production, income, and expenditure are three different phases of circular flow of income. Use of a particular methods depends on the availability of reliable data. Students, you have must noted that all the three methods given the same value of national income because they are used to measure the same physical output at three different phases. In India, the task of estimating national income is assigned with the Central Statistical Organizations, that is CSO. But in this video, students, we will talk about only income method. Firstly, we talk what is income methods. According to this method, national income is estimated in terms of factor income, that is compensation of employee, rent, interest and profit to the owner of factors of production, that is labor, land, capital and enterprise during an accounting year. You must note that students, national income is always estimating in a fixed period of time, that is an accounting year. It is also called, students, distributed share methods and factor payment. Components of factor income. Factors income are broadly classified as compensation of employee, operating surplus and mixed factor income. Firstly, we talk about the compensation of employee. Compensation of employee includes wages and salary in cash, wages and salary in kind, and employers' contributions to social security schemes. Firstly, we talk about wages and salary in cash. It includes all monetary benefits like wages, salary, bonus, commission, etc. Students, wages and salary is a reward for the work done during the period of time by employee and it is paid by the employer. Second one is wages and salary in kind. It includes all non-monetary benefits like rent-free home, free car, free medical and educational facilities. An imputed value of these benefits should be included in the national income. Employers' contributions to social security schemes. It includes contributions made by employer for the social security of employee. For example, contributions to PF, labor welfare funds, retirement pension. One thing remember here, students, the contribution in PF made by employer is included in national income, but the contributions made by employee is not included in the national income because it is a part of salary which is already been taken in national income. Our next components of factors income is operating surplus. Operating surplus is a calculated figure of rent, royalty, interest and profit. Rent and royalty. Rent is the part of national income which arises ownership of land and building. Royalty refers to income received from grantee leasing rights. Interest refers to amount received for lending funds to a particular unit. Profit is the rewards to the entrepreneur for his contributions to the production of goods and services. Profit is further divided into three parts, students. First part is corporate tax. It is a direct tax paid by the enterprises to the government. We know that it is a tax on profit. It is also known as profit tax or business tax. Second one is dividend. It refers to that part of profit which is distributed among the shareholders of the company. It is also called distributed profit. And third one is retained earning. Retained earning refers to the part of profit which is kept as reserve to meet unexpected incidents for business expansion. It is also known as undistributed profits or saving of private sectors or reserves and surplus. It means profit is a calculated figure of corporate tax, dividend and retained earning. And the third and the last components of factor income is mixed income. Mixed income refers to the income of the self-employed persons using their own labor, land, capital, entrepreneurship in their household enterprises. Students, these income are a mixture of wages, rent, interest and profit. That is why it is called mixed income. And now we will talk about the steps of income methods. The various steps involved in estimating national income by income methods are: firstly, you have to identify the production units, that is primary sectors, secondary sectors and tertiary sectors. Second one is estimate factors incomes paid by each sectors. The factors incomes paid by each sectors are classified as compensation of employee, operating surplus and mixed income. In operating surplus, we know that operating surplus is a calculated figure of rent and royalty, interest and profit. In third step, calculate domestic income, NDPFC. When factors incomes of all the sectors are calculated, we get NDPFC. NDPFC is equal to compensation of employee plus rent and royalty plus interest plus profit plus mixed income. In short, we can say that NDPFC is a calculated figure of compensation of employee, operating surplus and mixed income. And the last is to have to add NFIA in NDPFC to arrive at national income. Students, some precautions are to be considered while estimating national income by income methods. First one is transfer income are not included in the national income. Why? Because such receipts are not connected with any productive activities and there is no value addition. Second, income from sale of second-hand goods will not be included because as their original sale has already been counted. If they are included again, it would lead to double counting. And the third precaution, students, income from sale of shares, bonds and debentures will not be included because such transactions do not contribute to current flow of goods and services. And the fourth precautions, imputed value of services provided by owner of production units will be included as these are productive activities and add to the flow of goods and services. For example, imputed value of owner occupied houses, interest on owned capital, production for self consumption, etc. And the fifth precautions, students, payments out of past savings are not included in national income because they do not add to current flow of goods and services. Okay students, I hope we understand all these things. In next video we'll come with second methods for measuring national income, that is expenditure methods. Till date, goodbye.